your takeaway from today's trading session?
Well, even though NASDAQ wound up kind of dipping there at the end after holding up green most of the day, it still had an inside day to yesterday's trading range. So right now, all we can say was that there was some frustrated buyers when they didn't see follow through, but we did not necessarily violate not only yesterday's low, but also the 50-day moving average. So it's unclear, which is exactly what an inside day is. It's a lack of clarity by investors in terms of which way they want to go. Mm-hmm. However, there are some really bright spots in the market, as we can see, which are the transportation sector, which went to, again, another new all-time high, the retail sector doing quite well. And those two right now are taking all the thunder. The interest rates don't seem to be affecting them. Rather, they're reflecting other types of good news, which would be consumerism, which, of course, is the all coming back from the pandemic. And that, of course, bodes well for GDP. And then in the transportation, it's, again, getting back to normal life. Also, though, a lot of the hope for the infrastructure package. So it's going to be kind of a war here and see whether or not these sectors can hold up NASDAQ or NASDAQ winds up being a drag on the whole market.
It is interesting. I'd be interested to get your take as well, Michelle. These healthcare names, some of the best performers since the market low a year ago. Of course, on our reliance, the reality that healthcare and solutions are going to be playing a bigger part of our lives going forward. I do see Moderna shares rising after hours, up about 1% on some breaking news that its COVID booster shot generates promising immune response against some of these variants. As we look to the future, what the future holds, unprecedented spending, trillions of dollars funneling into this market, but a coronavirus that likely is not going to see herd immunity here in the U.S. And of course, it's not just a U.S. problem, it's an international problem as well, a global business travel problem as well. And so as we head into the summer months, do you expect that we might see this sell in May and go away adage that we've seen throughout history?
Well, I'm chuckling because, Kristen, your question is great. The adage is not necessarily a trading plan, though. I try really hard to ignore these sort of things. And also, the sell in May has not necessarily worked over the last several years. But to that point, there is so much uncertainty in the market right now. This is the time where I like to say, if I lived under a rock and I was looking just at pure price, what would I see? And what I see, apart from healthcare, which of course with the Biden administration, my anticipation would have been that that would have been a big winner this year, just like we thought solar would be a big winner, oil and gas would be a big loser, and we're seeing exactly the opposite. So what I'm seeing right now here is, I think inflation is sort of the big bubble that's sitting over the market. And we're seeing people like Yellen doing intimations about that and saying the rates will have to go up and then pulling back. And then you have the other people in the Fed saying, well, there is no real inflation concern because it's transitory. But all of this is affecting everything. And a lot of what the Biden administration does going forward will definitely have an impact. More government spending, more inflationary. The fact that we have such a shortage of raw materials right now with a diminished supply chain because of COVID also affecting the market. What the Fed does here is going to be very, very key, maybe even more than the Biden administration at this point.
Interesting. I do want to just talk a bit more about inflation. I had Senator Elizabeth Warren on earlier today, Michelle, joining me, and I said, look, let's look at it sector by sector. Are there particular sectors that you're worried about when it comes to inflation? Maybe not inflation as a whole, crippling this economic recovery or throwing some of the plans, the big spending plans, off track. But she said that there wasn't any particular sector that she saw that was really going to be an issue. Now, it sounds like obviously based on your work, there are some sectors in particular, and we already see certainly in the housing market with those lumber prices and home prices really ticking up. Are there sectors that are flashing major warning signs to you that this inflation is going to become a problem to not just investors, but consumers? Consumers are not going to be able to afford some of these goods.
Well, it makes me wonder whether or not Elizabeth Warren has gone to the supermarket lately. Food prices have been extraordinarily high, and if you're just looking at the futures market in some of the basic food commodities like wheat, corn, soybeans, corn, new multi-year high, soybeans, new multi-year high. You have sugar actually coming back from being asleep for many, many years. Coffee rallied like crazy today. So all of this food that we basically need to live on is costing 30 to 40% more over the last 6 to 8 months. That to me is pretty inflationary. If she's looking, and of course you just mentioned things that have to do with home building like lumber and steel and copper also going up. Maybe she's basing it on, I'm not really sure what. Perhaps she's looking at gold and silver, which haven't really reacted in kind, which I don't think is going to last for too long. But yeah, inflation is here. These are just not the typical ways that you look at the Fed metrics. They exclude food and energy, and even oil's been going up. So the metrics are archaic, and I would say live under a rock and look at pure price, and pure price is suggesting that we have inflation, and it's going to be continuing unless, I don't know, something magical happens. But with food, we have a summer drought also upon us potentially.
Yeah, those prices definitely real and hurting everyone right across the board, not just necessarily the uber wealthy. Michelle, I want to get your take on cryptocurrency. It's been hot. Even Dogecoin, which started as a joke, we know, with the Shiba Inu on the coin, now one of the most valuable by total market cap cryptocurrencies out there. Is this a sector that you're looking more at?
Well, we've been looking at it for a while. Of course, we started out with Bitcoin because that was the granddaddy of the whole crypto space. And now Bitcoin has sort of gone into somewhat of a doldrum here, possibly because the transaction costs and the whole speed of delivery is slower than, say, Ethereum, which has caught a lot of thunder. The Dogecoin is really interesting to me. It's actually taken fourth place in terms of the cryptocurrency. And as you said, it started out as a joke, but now all of a sudden little things are starting to happen. Besides the credibility of some institutional investors, some baseball teams are starting to actually say, Oakland A's being a perfect example, if you buy tickets to 3 games, 2 seats, you can pay for it with 100 Dogecoins. That's actually a pretty good deal. It comes to about $55 a game. So that's probably cheaper than what it costs to go to a baseball game if you're getting, I don't know whether the seats are in nosebleed territory or what. But the idea is that it's actually finally defining Dogecoin as having some intrinsic value. So we'll see.
Michelle, stay with us because we want to tap your brain on earnings as we get them after the close as well. I do want to bring in, before we get to the next earnings, I do want to give you a breaking story. We have a big development on the vaccine front. Moderna saying its COVID booster shot generating a promising immune response against variants found in South Africa and Brazil. You're taking a live look at shares of Moderna. They are rising after hours despite falling into the close on those comments from President Biden, currently up about 1% after hours. This new data coming as drug makers and scientists say people will likely need a booster shot of the COVID-19 vaccines, possibly additional shots each year, just like for the seasonal flu. And again, investors reacting positively to that news, sending the stock higher after hours. All right, Alicia, I want to send things over to you now to discuss these Uber earnings.
Yeah, Uber just released their earnings, and the big headline here, well, they missed on the top line, but they did beat on the bottom line. On the top line, they reported revenues about $2.9 billion, but were expected to report about $3.29 billion. And last year, this time, they did about $3.54 billion. But as I mentioned, on the bottom line, EPS, they're reporting a loss of 6 cents, but were expected to report a loss of about 54 cents. Just digging into their earnings report right now, they say that gross bookings grew 24% year over year to $19.5 billion, 22% on a constant currency basis. Again, revenue $2.9 billion, but the bulk of that seems to be in the delivery revenue. No surprise there, that about $1.7 billion. Just digging down here a little bit more, the CEO of Uber leaving this quote here in the investor relations saying Uber is starting to fire on all cylinders as more consumers are riding with us again while continuing to use our expanding delivery offerings. We will continue to innovate and find new ways to deepen engagement with our customers as as the only global platform that will help you whenever you need and wherever you want, whatever you want. Kristen, no real big surprise here. I think a little bit of the surprise is they didn't beat on the top line, but obviously it's a great thing that they did beat on the bottom line. I wonder, what are your thoughts seeing, I know we're just touching the tip on the earnings here, but what are your thoughts with Uber's report right now?
Yeah, Alicia, I thought you did a great job summing that up. Some of the things that stick out to me, that first quarter revenue and mobility revenue reduced by about $600 million because of the resolution, right, of those historical claims in the UK relating to the classification of drivers. The UK, another key market for Uber outside of the U.S., the biggest market outside of the U.S. for Uber, and it did lose money in settling those claims as to the way that it classified drivers over there in the UK. So that stuck out to me, as well as the delivery business, which is just Uber Eats growing more and more. And so even though we saw those revenue numbers actually miss analyst expectations, the delivery revenue more than tripling to $1.74 billion versus $527 million. So just goes to show, I think, the growth that we see in that segment going forward, as well as the freight business, and freight revenue coming in at $301 million, shy obviously of what we saw with the Uber Eats business, but that too was up by about $100 million from $199 million the same time a year ago. Monthly active platform consumers falling to 98 million versus 103 million. All in all, investors seem to like these results after hours. The stock we mentioned was up more than 1%, now kind of oscillating just around that flat line, currently up about 0.5%, dipped to up just about 0.2%. So I think investors really kind of trying to make up their mind here. But nonetheless, it goes to show that this economy is starting to improve. Uber is trying to ramp up its business as the vaccine rollout does continue here to ramp up. I do want to bring Michelle Schneider back in here, joining us from Santa Fe, New Mexico, for your reaction to this, Michelle. I mean, these numbers kind of a wash when it comes to Uber, at least on the top and the bottom lines, just those headline numbers. What's your reaction?
Well, it doesn't surprise me, because if you're looking back, of course, Uber is not something that a lot of people use over the last several months, except for the Uber Eats. And where we live, you can't even get Uber Eats. So it depends on living in a big city or not. But as far as the actual reaction, which is always what's important to the investors, is what's the reaction to the numbers? It's very muted here. The overall chart looks very, very heavy. Fundamentally, I was really rooting for Uber, because just in the last several days, we had some house guests, and the word Uber came up. They Ubered here, they Ubered back to the airport, they Ubered around town. And so, it's like, wow, okay, we can see that it's starting to come back as reflected by the fact that people are traveling. But let's just go technical, under that rock again. I was very hopeful it would hold around this 50 level, and that's where I want to see hold. And if it does, it really starts to need to show us a little bit of volume to the upside here before I would gain confidence in trying to be a buyer of the stock. And right now, looking at it after hours, it was trading around 51.50 at my last glance. That's just not enough. I'd like to see it get back over like 52, 53, 54, and then maybe we can say, all right, 50 is your risk point, and we'll take it from there.
Mm-hmm. Michelle, thank you so much for that context. Again, those shares up fractionally after hours. We'll wait to see what, if any, comments are made on the earnings call with analysts, particularly about the classification of gig workers here in the U.S., with the Biden administration ending a Trump-era rule on that just today in an announcement. I do want to turn to Etsy now. Etsy also coming out with earnings after the close, reporting earnings per share of $1 apiece. That was higher than expectations of 88 cents per share. Revenue coming in at $550 million, also beating expectations of $529 million. Still, investors seem to be pushing these shares lower after hours. I at least see the stock down 7%. It looks like they're, yes, after hours. So this was not enough by any means to appease investors, despite us knowing that Etsy was extremely popular during the pandemic. There were more sellers on it, more people at home making crafts, and those crafts and products, artwork, decorations, key components to your home and living space, those were in demand. So this is kind of a surprise to the downside here. We should note some of these figures that I do want to break out individually. The consolidated GMS, $3.1 billion, up 132% year over year. Its marketplace GMS, $2.9 billion, up 144%. from the same time a year ago. And when we look at this particular report, we always look for those comments from the CEO. We did hear from the Chief Executive Officer, Josh Silverman, weighing in that last year the world took notice of Etsy's highly differentiated value proposition. That incredible momentum has continued into the first quarter of this year, so they feel pretty strongly about that. We moved the needle by growing our team to deliver an exciting roadmap aligned with our right to win strategy, executing a dynamic marketing strategy focused on driving frequency and keeping our buyers emerged. A time that human connection so vital, Etsy says it provides one-of-a-kind community where sellers are empowered to grow their business, reaching buyers who find their different goods unique and ones that touch the heart. So notable there that the second quarter guidance also in focus. The current quarter guidance, that is revenue of $493 million to $536 million. That is versus the consensus of $493 million. So again, still to the higher side of consensus, but not enough to win over investors. Michelle, I want to bring you back in. What do you make of these Etsy results and this certainly punishment by the stock market?
As you were describing it, I think you made the best point of all, which is the stocks that excelled during the pandemic and what's happening to them now. And Etsy was another chart that was really starting to fall apart ahead of earnings and needed to prove that it can actually shine as compared to something like Gap, the Gap, which did very well and made new all-time highs. So we're seeing again this switch from e-commerce maybe back to more brick and mortar, which is actually a good thing. But it's really interesting in terms of these pandemic winners, because you haven't reported Fastly yet, but I just looked before and it got crushed. I was hopeful for that stock as well. So all of these big tech and these growth stocks and these ones that did very, very well, Zoom was going to be coming up. Wayfair was another one that went up over 1,000% from March 2020 to March 2021, and now again is crashing with its earnings on tap tomorrow. So it seems this rotation is really bigger than any of the actual numbers that are coming out. And maybe that's a good sign ultimately, obviously not for stocks individually like Etsy, but in terms of the overall economy. And that's what I'm watching for. We want to see some of these companies hold up and not completely fall apart. But on the other hand, if we keep seeing that money going into more brick and mortar, then that would be actually a positive sign.
Mm-hmm. Yeah, I think all really good points, Michelle. That rotation we've seen be in play here for the past few months, and certainly a downside impact for Etsy again, despite a beat on the top and the bottom lines and pretty positive guidance that it gave for the current quarter to the high end of analyst expectations. So we'll continue